Hey everyone, and welcome to another episode of Soldera Market Discussions. I'm here with Stenver. Say hi, Stenver.
Hey, how you doing, Oliver?
And yeah, today we thought we would just go over how producers make the most profit from guarantee of origin sales, but more specifically, how they do so in the current market conditions. So yeah, let's kick things right off. Stenver, how do you see the current market for producers in 2024, and do you think it's going to get better in future?
I mean, it's been tough, right? Like to take a step back, last year the geo prices were somewhere around 8 euros per megawatt hour, even up to 10 at some point. And then as we got through the summer, suddenly the prices started dropping sharply. By winter, they were 5 euros, 4 euros per megawatt hour. And by spring, they were 1 or 2 euros per megawatt hour. And a lot of things happened there, and a lot of people were like very confused. Like, how did this happen? We saw a lot of people living in denial. Like when we were telling them what the market was like, they didn't believe us, and they were like holding on to their guarantees of origin, not wanting to sell them. And we were like telling them that, hey, you can see the market. Like, there's a fundamental reason why that happened, right? The Norway reservoirs are very full. There was a lot of rain. There's a lot of humidity and precipitation out there. So the market is flooded with renewable energy, and that naturally pulls down the prices. And like the whole thing actually, funnily enough, started with the Italian auction. So Italian government has been doing these auctions, and they set like the price floor for their auction. They hope that that gets them better results. Well, what happened in reality was that the price floor just made the entire auction fade multiple times, month after month, because the price was dropping further. And each time it faded, it had massive negative impact on the prices, which caused further downward pressures. And I don't remember the exact numbers, but I've heard traders run the calculation how much money Italian taxpayers had to pay because of these practices. Actually, like it was a lot of money, because eventually they sold all these geos off, but like at a massive discount versus if they had just trusted the market to do its thing. In the summer 2024 was around €1 per megawatt hour, give or take. And by now it's around 40 to 50 cents, right? So you've seen this massive downward trend. 2024 also had an overabundance of like precipitation, and the reservoirs in Norway are full. Plus, there's been a lot of renewable energy construction out there. Plus, Italy again failed its September auction this year. So like it's definitely been in like a very negative direction. However, interestingly enough, for the first time, if you like look at all the way back to the prices of guarantees of origin, historically, the forwards and spot have been trading in pretty much the same area. And if you even do like a backtracking calculation, like what would have happened if I would have always used forwards instead of using spot, you can see that historically you would have lost money on forwards. And just every month selling in spot, kind of like dollar cost average sales, if you will, like just letting somebody else carry the price risk and trusting the market, you will have made more money. It's like the index fund investing all over again, right? Just go with the market. When last summer, when the prices started dropping, something happened, and suddenly the forwards became a lot more valuable than spot. In fact, like 2 or 3 times more valuable. So ever since then, it's actually been very beneficial to lock in your forward prices as well. That's a bit about history. Now, when we look forward, does it get better? It absolutely will. Like there's a lot of signs pointing to that. We've done a lot of analysis ourselves. We bought information from other third parties who have run the future predictions. SDX, which is one of the biggest trading firms out there, the biggest guarantee of origin trading firm out there, they in Iceland, Reykjavik, gave a very bold estimation that in a few years, we may have even €10 per megawatt hour again, or even above in the best case scenarios. So, and a lot of it essentially comes down to all this transparency reporting that the European Union is putting on companies, the fact that renewable energy is just becoming more and more popular, more people want to use it.
Just quickly for those out there who might not know all of the intricacies of selling goes, what's the difference between, selling spot and selling futures, just in simple terms?
In simple terms, selling spot means that every month, let's say you have like a solar installation, let's say 10 megawatts, and every month you generate some amount of guarantees of origin. Let's say you generated 100 megawatt hours or something on some month. Then you could either just sell them all away every month as you generate, as you go. That's selling spot. Or you could lock in the future price. So you lock in the forward price in next year as you generate the next year production. You already have sold it away. It's the same as in farming. You can do futures for like grain and all the other commodities. You just lock in the price, and when you finally deliver them, you get the money that you promised, and you deliver the volumes that you promised for that as well. So it's pretty simple.
And if geos that are produced expire within 12 months, if you're selling future, you're not selling the current geos that you have in your possession. You're selling the ones that are going to produce at a future period, isn't it?
Exactly. You sell the future ones, not the current ones that you already generated. The ones that have been generated, those should all go to spot sale, basically.
Sure. So you could be selling spot and futures at the same time as a producer.
In fact, that's what we recommend most of our producers to do. So in Soldera, for example, we're all about trusting the market. And, instead of trying to trade and hit the extremes with trading, you may get very lucky. Maybe you hold on and the prices explode and you get the best deal. But the opposite can happen as well. We've seen producers this year lose like more than 60% of their revenue from guarantees of origin, simply because they try to be smart and do trading, while not actually having a specialized trading team that tries to figure all of this stuff out. So our recommendation for producers is, stability. At the end of the day, so renewable energy production, you want to have as much stability and predictable cash flows as possible. So we recommend doing partial forward hedging, let's say like 30% or 60%, really depending on how much stability or how much you want to leave for potential upside. And then the rest selling to spot as you produce them. And it's really about, like, in Soldera, we do it all for you. So every month, all of our producers, we currently have like 1,300 renewable energy production points across EU. They all generate guarantees of origin. We aggregate them together. By aggregating together, we get volumes, and volumes get you the best deals on the market. That's really how it works. The market is very simple on that front, since it's all OTC. It's like all done. All the deals require a lot of manual work and so on. Then the best way to get the best deals is to just have more volumes. So by aggregating all the people together, all the producers, getting those volumes, and then just following a schedule, selling every single month, you can really get the best deals on the market. And we do the same for forwards. Instead of just locking in all your forwards at a single point, let's say you want to hedge like 40% of your portfolio. Like that's the amount you want to put to forward sale. Every quarter, let's say January comes now, then you hedge 10% of your 2026 quarterly, each quarter delivery. So over the year. Now comes April, the next quarter, you hedge another 10%, again, quarterly hedging over 2026. So over the 26, you also deliver it throughout time. And our system automatically, does the prediction, how much you produce, depending on smart algorithms, and then we help you allocate this portfolio, and everything is done automatically using our advanced intelligent tooling.
Mm. And when it comes to futures, I'm interested, are the buyers confident that they're sort of making the right decision? I know it's kind of a difficult question. I mean, how strong an indicator are the sort of futures deals that you lock in? Like, historically, backdating those, have they been accurate at predicting the price movement?
They're very volatile. Like, the geo market is very volatile, and it's very hard to accurately predict where the market goes, because it's affected a lot by rainfall and weather and these things which are somewhat still unpredictable for us at this point, especially over the long term of the entire year, right? And this is also why we don't recommend like hedging away 100%. So let's say you hedge away 100%, and then it turns out we're going to have a very dry season. And over that dry season, the prices will skyrocket by the end of the summer or something. And then you're just, completely missing out on that one. We've seen offers made to producers in some cases where the buyer says, we'll lock in the next 10 year forward. I mean, yeah, you can do it. You have very predictable cash flows, but you could also lose massive amounts of money over those 10 years because nobody knows where the market is 10 years, in 10 years. But we strongly believe that the market is going to be a lot more bigger and in a better place than it is right now. All the signs are pointing towards it. All the regulations that are coming out do require using renewable energy, government subsidies, all the ESG, the corporate transparency. In Estonia, for example, if you buy an electric car, you get government subsidy, but only if you use renewable energy going forward. So these things really will drive the demand in the future. And locking in for 10 years is, while it causes maximum stability also means no potential upside.
So you spent a lot of time sort of analyzing the regulatory environment, building the tech, in accordance to that, really getting stuck into markets and thinking about where they're going to be going in future. But what's the sentiment amongst producers? Do they think it's going to go up? Do they really have an understanding of price movement? Do you feel like when you're approaching them and you're talking to them, they just think, geos aren't worth it right now. They're too cheap. Yeah, what do they think?
Well, first is that the thinking of how much they're valued is completely from one spectrum edge all the way to others. So like we see some producers believe that by 2030, we won't have the guarantee of origin market because we'll be 100% renewable. I'm kind of skeptical of that claim, but that's what some producers truly believe. And then there's the other spectrum who sees that this is only the beginning. But what we see in the middle and what a large part of producers actually where they're at is that, and they're very honest about it, and it's completely understandable why, is that they frankly just say that they don't know. They don't understand it. The market is not actually very transparent if you don't specialize on it. Like you can generate transparency for yourself in this market pretty easily. There's like data service providers. There's now public auction platforms, which are great, like Montel Marketplace and, Epic Spot. And these auction platforms have created a lot of transparency. And there's more and more talk about geos. But the reality is that most people in this market currently feel like struggling to find like information. And it's also for most producer guarantees of origin are like number 10 priority, because it's like 5% of their extra revenue maximum, while and they have like million other priorities to maximize their new constructions and electricity, power, and so on. So geos are like not at the top of the priority list, and at the same time, like they need to make like decisions: do we sell now or do we not sell now? And that's very hard if you don't have this information, and it's not for most producers worth it to really try to get that information. It's just too expensive for them compared to how much they're going to get back from it. And that's why we believe like the automatic tools are also the best for them. Just rely on good market strategies that aggregates everybody together, that uses smart algorithms to do it for them. And that's why a lot of people have really trusted us as well. And it's been one of the main reasons why we've been growing like 50% month to month in such a short time.
Yeah, it's exciting how you guys are doing. I'm really interested about aggregation and how specifically aggregation gets better deals. I mean, I understand that buyers want to get more geos in one go, but what's that difference look like? Is it difference between somebody who's producing geos not being able to sell whatsoever, or just getting a better price?
It's from the buyer's perspective, a lot of the buyers over here on this market, they're calling and searching for sellers like a big chunk of their day. And if they find the seller, then they need to make sure the seller has done KYCs, which is a big process. because in many countries, guarantees of origins are securities, like in Germany. Then they need to make sure that there's a contract signed. If it's a forward deal, they need to make sure that they're like a credit responsible party, that they can actually deliver what they promised. So there's like a lot of admin work involved in every single deal. Now, if you're a small producer, relatively, let's say you generate like 1 gigawatt a year, it just becomes such like it's very hard to make money on those trades. So because like all of the effort you put into it, the labor is going to basically eat away all your margins, because usually they don't even, the buyers, they need to talk with their back office, with their compliance team and so on. So what naturally starts happening is that, one, they don't even bother with the small producer. They're just going to say that's too small volume, I don't care. Or they're going to just offer them lower price to make up for all that. But if you aggregate all the production together, go behind a single counterparty, then everything changes, right? Suddenly behind us, there's thousands of production points, but for the buyer, we're a single entity. So it's kind of like this virtual renewable energy power plant where they can just source. And that helps them a lot. And that just gets you the better deals. And they can get the big chunk at once and make sure it gets to the right places. It's pretty simple.
Yeah. And do you let them know exactly what that aggregation actually comprises? As in, I guess they want to be purchasing a specific type sometimes, or do you have to aggregate only wind or only solar, or do you just put it all together?
We like really break it down, like the technology, wind, solar, hydro, the COD, like when did the plant become operational, the generation month by month, when did it become generated. Sometimes some producers like set like minimum price thresholds, which we need to hit. In practice, what's happened is if it's, too out of way, then they just won't sell and it just goes to the next month. And so on. So like we really break it down to whatever the buyer needs, and they can either try to buy in part of it or all of it. But our goal is simple. We just sell to the highest bidder, and we use like algorithmic approach to how we do those sales instead of letting human emotions into it, because that's when things can get bad, as stock markets have really well shown in the past.
Let's look at the role of automation now. I'm interested how much. Well, obviously there's a time saving, but based on the average sort of, I always want to say like salaries, because you've got somebody sitting down and entering that. How much are they going to be actually saving, right?
Yeah. Well, there's two parts of it. One is how much they're going to be saving, and another is how much they're going to be earning more, right? So that's the two parts essentially. And it's significant, like especially because one thing that's very hard to measure is like, what was your strategy without us versus what it has been with us. And we've done some analysis on that in the past. And because like we've had producers, like I mentioned in the beginning, who have said like, I don't want to join it because I want to hold on and wait until it gets back to like, last year prices. And then a few months ago, most of them, like almost all of them that we talk, have eventually joined us. And when we run the numbers, like what would have they earned then, they had joined us immediately versus what they actually earned. It's like up to 3 times difference. Like we could have made them 3 times more revenue than they will have themselves. Like that's a very huge increase in their bottom line that they were missing out. So for us, like maximizing the revenue flow from guarantees of origin is our number one priority. We put a lot of effort into analyzing that, into building out our network. In our last tender, we had more participants than the French government's guarantee of origin tender. So like you can really see that we have quite a nice network out there of buyers. So yeah, that's the thing. Now, when it comes to savings, if we discount like just maximizing the revenue, like when we only focus on the savings, it depends a lot from country to country. And it also depends on the size of your business. So when you're a tiny producer, in some countries, you need to put a lot of effort into like monthly issuance, for example. So you really need to like every month read your information from metering point, enter those data in your TSO, confirm it through mobile phone in two-factor authentication or something, and that can take quite a lot of time. In the worst case, in one utility company, we know they have like specialized people who only just do issuance reporting every month. That's literally their whole job. They just do it. It's very time consuming, very annoying for them. And it's also very demotivating for the workers because, it's not very exciting just copying numbers from one place to another. And we automate all of that away. That just replaces that lets these people do something more productive, right? But in some countries, the issuance is basically automatic. So you don't see like every month they just see more guarantees of origins come to their account. But then there's the sales side. Like when they start doing sales, they always need to go through KYCs for the buyers, like almost always, unless the buyer is like a friend or something. When they go through the KYCs, that's additional compliance or overhead. If they want to get good deal, then they really need to go out there and start sourcing buyers. So on the saving sides, depending on the size of your business, it could be quite maybe a few days a year, or it could be like literally full-time people's positions, essentially.
Interesting. Talk to me more about how Soldera, do you approach buyers or do buyers approach you? I mean, it's kind of like your business model is that you had all of that yourself. Would you ever consider going to some sort of more public-facing model? Is that even possible? For example, operating some sort of marketplace, or you said you had more participants than a sovereign auction. Would it be possible to run your own auctions? Do you already do that? Yeah, how does that work?
Yeah, so most of our producers that we have come to us, including internationally. Like we've had producers come to us from like across different European countries. We even had now come from India and US. Like globally, producers come to us and they're like, "Hey, please bring this solution for us as well." So we've been like very active in expansion and getting to more and more countries, and it's one of our biggest focuses. Like rapidly integrating with every local registry. Even if they don't have an API, we still integrate. Like we really, really specialize on that and do it like very fast. And but we do have like business developers as well who do talk with the big guys, utilities and so on, because they usually require more attention, more control. They have some special requirements. So, and we're very flexible in making sure that all their needs are fulfilled as well. And this comes to your question about the marketplace. Like we currently don't see ourselves as being a marketplace play. We really want to focus fully on helping the producers. That said, when we do talk about like big utility scale producers, they obviously want more control. Like trading desk from biggest utility in like Norway or Finland and so on, they're not just going to hand their portfolio to us and say, do whatever you want. So we sort of offer them this hybrid approach where they can opt in either partially or completely into one of our trading vehicles. We have multiple different ones on our platform, and they can even, allocate parts of their portfolios into multiple ones. Then they can see the results, they can assess it, they can compare it. And, if they like it, then they can just increase the amount of portfolio they flow into this trading vehicle. And it's always very transparent, very much focused on making sure the producers get exactly what they need, that their compliance needs are fulfilled. Like one producer told me that my biggest problem is that I need to, according to my shareholder agreements, get the best offers on the markets. But I also have really high compliance requirements, DSG and so on. So every time I go to sales, I need to like put a lot of effort into this KYCs and stuff. And it's a lot of work for us. And we were like, well, now you can just use one of our trading vehicles. We handle all the KYCs in the background. We're only a single counterparty for you. And we give you full transparency that this was really the best deal on the market.
Mm-hmm. And yeah, so talk about that transparency. Do you have to compare with other data sources? Because he says he has to go and tell his shareholders that he got the best deal. You give him a way to prove that, right? Or they have a way to prove that.
We really want to bring more transparency in this market. We want to make sure guarantees for each market succeeds. And it will succeed if there's a lot of trust around it, if people see exactly what's going on, and they know that the renewable energy producers are getting the best deals on the market. So for us, it's all about transparency. The producers see exactly how many people we had in tenders. They see the price ranges. They don't see like who exactly were the offers and buyers, because sometimes the buyers actually don't allow that for like their own compliance reasons. But that's fine. Like that's not what people usually need. They see exactly like all the information they need for their compliance purposes, and I'm bringing transparency. They see the market trends. They see what's going on, and the way we work is like very well regulated by the contracts we sign.
Do you ever get people who just really do not understand your offering? You explain that you bundle, you explain that you aggregate, you explain that helps them get better pricing. Do the whole pitch, everything. They just don't understand it. And at that point, what do you do? Do you just walk away, or do you keep trying? Or I'm curious.
I mean, look, we're not for everybody. There's people who want to do their own auctions or tenders and want to do it themselves. Some people actually get excited about, trying to sell their guarantees of origin, and it's sort of like their hobby. So even though they understand it all, they still don't join us. Some people I've seen literally like, try to treat us as traders. Every time they come to us and are like, what price are you going to give it to us? And I'm going to be like, I don't know. The market will show us eventually. And, then they're like, but you're buying and selling. We're not. No, we're not buying. We're brokering and aggregating, right? So it's completely different. And eventually some of them understand what we do and join, some of them don't. And that's fine. We can't service everybody. That's fine. We do the best for the people that just are value aligned with us and see the benefit we bring to us. Essentially, people who want to make sure they have as little back office work as possible and want to get the maximum results from the sales.
Let's think about wrapping here, because we're getting close to time. But I'm curious about the current state of the market. Let's end on that. You think the Soldera stance is that markets are going to improve, but either way, it doesn't really matter so much to producers who are getting it in addition to their existing revenue, right? So if you're not making any money on goes, you might as well start, because right, it's just in addition to what you're currently earning. But either way, it's looking good in future, and it's kind of a little bit in a slow period right now.
We're very bullish on the future, and the markets sort of work on cycles, right? So right now it's a downward cycle, but it's already actually showed improvements this month. So usually the December is a bit busier month because everybody's want to wrap up their books and make sure they have everything covered, so all the ESG departments wake up and so on. The producers who are not earning money on GEOs, I mean, they're losing out on up to 5% revenue. That's massive. And you won't get them on backtrack. You may as well start getting them right away, because 5% extra revenue on renewable energy is huge. Even if right now it's smaller than 5%, it's in terms of profits, it's huge, because it's a low margin business, right? Mm-hmm. And so that really helps them. And once they start factoring in on that, suddenly their balance sheets and financial plans become a lot better. And since a lot of renewable producers, a big part of their job is fundraising to build new installations, right? Making sure you have a good strategy in the entire geo management is essential to put the best foot forward when doing this fundraising. And using Soldera as a service to essentially manage this full stack, we've heard it really helps. It provides a really compelling narrative and story for investors, plus the results speak for themselves as well.
I've got a product idea for you guys. You should add a little Soldera wrapped, definitely not inspired from Spotify, at the end of the year, so producers can see exactly how much extra they earned because of the geo sales through Soldera, and that can be a standalone slide in whatever deck or business plan that they have to show to their investors when they're fundraising.
I love it. Why don't you put it together? That'd be great.
Yeah, let's do it. All right. Well, cheers, Stenver. That was a really good combo. We'll try and do these weekly, but whenever we get around to it for the next one. Thank you very much.
Thank you. It was a pleasure, and looking forward for the next one.
Cheers. Bye.
Cheers. Bye.